Question number 1. Do you have any advice on setting up LLCs for my businesses and determining how to pay myself? All right, so with this question, let's break this question down into 2 parts. The first portion of the question is setting up the various LLCs. So we always recommend that you set up some type of LLC or some type of entity to help from an asset protection standpoint. I think the first thing people should be very aware of is that the entity itself very rarely has any type of control over the taxation of your businesses. Very rarely. There are occasions where it does, but very rarely does the entity type control taxes, especially LLCs. Especially LLCs. LLCs are more of an asset protection strategy. It is designed to help limit your liability. So in the event that you were sued, they can really only come after assets of the business and not after assets of you personally. Now, you do have to not pierce that corporate veil. And what that means is that you must make sure that you're not commingling your assets. Meaning you can't be paying for business expenses out of your personal account and out of your personal expenses out of the business account. You can't commingle those assets. You can do transfers. For example, you may say, hey, I have this one particular credit card that really gives me a lot of great points, but it's in my personal name. So I want to run all of my business expenses on this card and then let the business pay for it. Well, what typically would have to happen is that you would absolutely have to make sure that you are properly reimbursing yourself. Now, depending on your entity type, there may be some additional rules that you need to follow to properly reimburse yourself. But you want to make sure that you have the appropriate documentation, you figure out what that total charge is, and then you'll do a transfer from the business account to pay for that personal credit card expense. So you want to try to keep your books and records as clean as possible with the least amount of commingling possible to make sure that you're not piercing that corporate veil. Now, when you want to determine how to pay yourself, that's going to be a question that's going to be a little bit more in depth. Number 1, if this is a LLC and an LLC only, you want to make sure that you're just taking owner's draws. That's the traditional route to do it. You take an owner's draw, meaning you do a transfer. You're not going to pay your rent out of the business account or your mortgage out of the business account. You're going to do a transfer of whatever amount of money you need to pay yourself from your business account to your personal account, and you go and pay your bills. That's typically how LLCs work. Now, if you have an LLC but it's taxed as an S Corp, or if you just have a general S Corp, then you want to make certain that you are absolutely paying yourself reasonable compensation. You need to pay yourself reasonable compensation. That is by law. That's not something that we just made up. If you're an S Corp, because you want to save money on self-employment taxes, you must pay yourself reasonable compensation, meaning you must be on payroll. So there are some reasonable compensation analysis in the marketplace, some reports that you can do and figure out how you need to pay yourself. But general rule of thumb is going to be anywhere from 40 to 60% of the of net profit. Number 3, if you are a partnership, you're typically taking some type of distributions out of the accounts to pay for yourself. And if you are a C Corp, you also should be on payroll, paying yourself reasonable compensation.